Absolutely, Scott. It would be my pleasure. Right after the show, we're going to go over everything and even more if you would like. And welcome. All right. We good? We're good? Colton, are we live? We're good? We're live? We're live. Thank you. Ladies and gentlemen, awaiting the analyst's next step, I'm going to show you the true recipe for success by being a reactive trader as opposed to a predictive one. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I have so many great things to show you guys today. I mean, again, just the attention that our videos get has really been something that has really gave me, the true platform. I mean, to really reach out to you guys and help you guys. So I hope you guys watched Evolutionary Gathering video number 20. It is available on YouTube and T3's Facebook Live page. Definitely check it out. And I have so much more to share with you even right now. But first, by watching this video, you are agreeing to hold me, Mark Melnick, and T3 Live harmless and not responsible for anything that might be disseminated on this video. Whether you hear it, see it, read it, think it, dream it, if you do not agree to those terms, you must exit this video immediately. Well, thank you so much for agreeing to that. So, I had a little bit of a interesting topic today. A lot of traders I feel these days are very predictive as opposed to reactive. And I think that is a very negative quality. It's okay, I think, to be predictive when you're using fundamental analysis. However, when you're an intraday trader and your goal is to make income, most traders, they want some consistent form of income. They want to be making money in the market. They want to pay their bills and they want to have a little bit of money over to save something at the end of the month and they'll be happy. The truth is, most traders, um, they could care less about making $1 million. It's true. If you're listening right now, you probably also care less. A lot of you, 30, 40, 50,000, 100,000, 200, 300, 400, 500,000, and you're gold. It pays all your bills. You could take care of everything that you need to in life. And while yes, having $10 million is better than having 5 million, what you're really aiming for is that form of consistent success where you can make money in the market. One of the biggest mistakes that I see out there are a lot of people what I like to use the word is vomit. They like to vomit a bunch of names. Like, I ran my scanner, these are the names following my scan, and just barf all over and say, here, look, try, without making a disgusting analogy, just try to pick one of the 50 names, 40 names, 30 names, 20 names, 10 names that I threw at your face right now and try to figure out which one is actually going to work and pay money. And when you're doing that, you're becoming less of a reactive trader, more of a predictive one. You might go and you might see a name and you might say, wow, this stock it ran all day. How am I that person to buy at the bottom there? And I think traders get very caught up in this sort of mentality where they just really want to, be the bottom catcher of these ideas. They really want to be the bottom fisher. They see these names with these rallies and you fantasize about it subliminally. Really, you fantasize. You say, "What if I had a position from like over there?" And I'm telling you that is the wrong way to trade. So I want to show you how to be a reactive trader as opposed to a predictive one. So one of the things we do in the Newsbeat live room and why a lot of you have been having so much success recently is simply because I'm actually turning you into reactive traders. And I got an email at 4:20 p.m. Yes, very marijuana-like number. And it just came in a couple hours ago, and I just wanted to share this email with you guys. from a member of our room. Greetings to you and your family. This is like how you start knowing that you're actually pushing on the steps of success. And I know I get hundreds of emails like this, and I know I cherry pick the ones that I share, but there's so many great emails that I don't want to turn this into like a mailbag episode where I just go through emails. But I think it's important to know this. I'm going to explain this to you, and then I'm going to show you how you can actually become a reactive trader as opposed to a predictive one. So, greetings to you and your family. Sorry I took this long to tell you about my progress as a trader. It's no problem. After we spoke to the member on the phone. Again, one of the things we do here is there are a lot of you members that I spoke to on the phone. I have called a lot of you members, and again, we do go the extra mile here in the Newsbeat Live community because we genuinely care about your success to the point where, we're working overtime and I'm working overtime on the phones with you guys trying to help. So after we spoke on the phone, he started buying 10 or less contracts, sold very quick for profit. This is the key which I loved about this email. I did not care about the amount of profit since I just wanted to heal my psychological toxicity as you recommended. And yes, I did have a few small losses that I took without regret. Also, I am not doing stupid trades and got rid of the overnights. Plus, I watch all your shows. I am very proud of myself since I finished March less toxic with a small profit, with confidence and no fear of missing out or FOMO. Please tell me what you think and let me know what you consider is my next step. Thank you for all you do. I see that you're a great and cool person. No doubt you are a super husband and dad. Thank you. But most importantly, that was the nicest compliment that you can give a father. You are a real human being. I have a long way ahead of me as a trader, and I'm willing to continue learning from you. Thank you, thank you, thank you. My best wishes to you and your family. If you ever travel to El Paso, Texas, mi casa es tu casa. Okay, so what was the point of the email? The point of the email, how that should help you, is I talk a lot about psychological toxicity. A lot of traders out there think that you're just going to suddenly learn somebody's strategy, apply it, and all of a sudden you're making money just like they are. But the truth is, why are over 90% of traders losing? Is it the strategy or is it you? Well, this person can make money off the strategy, but those 20 people following them, one or none of them can. So, how do I get there? Like, what is missing? The missing piece of the bridge is psychological toxicity that needs to be healed. And it's kind of funny as a mentor and somebody who's mentored people. Um, usually prefer people who have never traded a single share in their life. Those are the easiest people to mentor. People who've been trading like 6 months or less, 0 to 6 months. Those are the easiest people to mentor in the world. Why? There's no curing of psychological toxicity. You see, what they don't tell you in the market, what's not attached to these strategies, is the amount of negativity that's going to be applied to your future trading by trying certain strategies. All traders have their strengths and weaknesses. And those who just really, exactly, Kevin, they haven't developed bad habits yet. And it's not even the bad habits. I could break the bad habits. But even after you break a bad habit, the residue that's left behind, the psychological toxicity, the residue, that is a very interesting thing to clear out. And yes, I have cleared it out. I can clear it out. I'm in the process of clearing it out for you guys. And that's going to really be your next step. So, as a reactive trader, I mean, I don't know if you were looking at the markets right now, but the markets are up. It could change by tomorrow morning. The markets are up massively right now. I mean, I'm just guessing like the spiders could gap up like 3, 4 points or something stupid. Like right now, I mean, the markets are up massively and it's really throwing traders for, I'm going to move my face only a mother could love in the bottom left. It's really turning traders into really like interesting predictors of the market. And, everybody saw the inverted hammer on the weekly and people were like, "Oh, the market's probably going to drop, from last week," and then it ended up pulling a little lower, but mainly went higher and closed stronger, and now we're gapping up again. I mean, I'm simply I'm simply going to tell you right now with this market. The traders who are getting so caught up, the traders who are shorting, waiting for that down move, that is a predictive trader. Those are the traders in this situation who are getting their you know what's handed to them on a platter made of silver. And it's very hard because nothing like this has ever happened. Do I think we're going to head lower within now and the next few months? Absolutely, I feel that way. But my point is, even if you feel some way, whoever told you as a trader, in fact, the majority of things that you feel and think as a trader are the majority of things to be ignored. If you watched our evolutionary gathering, which a lot of you guys loved, and again, it just all our videos, on T3 just go viral. I mean, that video just all our videos, they just people spend hours and hours and hours watching these videos. So, and the feedback you guys send me is beautiful. So I know it's helping. But the point I'm making with these videos and what they're actually doing is, yes, I think the market's going to go down. But the question is, what am I doing about it? Well, if I wanted to be a predictive trader as opposed to a reactive one, I would be short right now across the board. And I would have a ton of put plays, and I would just be waiting for this market to go down, cursing, suffering psychological toxicity every time the market goes up. I actually know where the market is going to bottom with about 95% success from my weekly results. So when I call it on the weekly, I'll be right 95% of the time. Now, do you think I was just telling you what happened in the past? No, I'm going to tell you right now with 95% of effectiveness in the future where the market's going to bottom out, insinuating a down move. So I know you guys love the 821 curl strategy. Let me tell you this. You see how this is a weekly chart of the triple Qs. You have the yellow line you see here is an exponential 8 moving average. The blue line you see is an exponential 21 moving average. What you see here is it went down. The 8 crossed under the 21, crossed back above the 21. As soon as the Qs on the weekly hit the exponential 21 moving average, as soon as we come back and hit and break this blue line, about 95% of the time, if you go long for a week, you'll be right. So it's kind of funny. Even though every trader is looking at the market trying to predict when it's going to go down, I'm saying, well, why not just be a reactive trader? I know it's a little better than 95%. I rounded, down to the nearest number, by the way. I know from what I do that 95% of the time, I will make money calling a successful bounce of the market. But how often, what percentage of the time am I going to be correct calling the downturn of the market here? Over 70, maybe. Something that we've never seen before. There's really no stats to ultimately predict it. I mean, the way we rallied in the market has never happened before on so many record breaking instances. So it's kind of funny when people actually tell you, the history always repeats itself. No, it does not. History sometimes repeats itself, which actually shows that it's more random than not. That's like saying like you roll a 20-sided die and it rolls a 20 and be like, oh, look, history repeated itself. I remember rolling a 20 before. I mean, in this market, this move has never, ever, ever happened before. But on the weekly of the Qs, when you curl down, curl up, and then come back and hit the 21 moving average, there's always an opportunity to make money. And I back tested this actually throughout my career. This is a 20-year back test going back to when I started as a trader, an intraday trader in 1999. And if you want to see how this strategy worked last time, it was right over here. We crossed under. No, actually, this is the last time where we crossed under, right over here, actually. All right, so we remained above. Wait, the yellow. There we go. We crossed under right here. We crossed over. And then when the Qs hit the 21 moving average again was right over here the week of November 4th. And that was your buying opportunity. So what you're waiting for now is the market to come back and hit the 21. And this would have been your buy point at the end of this week right here for the triple Qs. right before the triple Qs, and this was back in 2016. Okay. Right before the triple Qs closed at 113.65. The next week went to 118.38. 5 points in 1 week. Forget about the fact that you even did this. So what I'm saying is that was the last time the Qs did this. So the Qs don't really do this often. So what I am telling you in English, if you want a 95% strategy to be correct here, just wait for the Qs to hit this stupid blue line. And this stupid blue line is an exponential 21 moving average on the weekly of the triple Qs. Not only that, it works on the spiders. It actually works on the spiders as well. So the spiders are a little closer, which should be interesting because JP Morgan is reporting soon, and other banks obviously. But right over here on the spiders, when the spiders decide to come down and flush through the 21 and break it, that's when you actually want to go long the spiders. And if you do that, you are going to make money 19 out of 20 times based on my 20-year back test. So here's the point I'm making. I don't really have any statistical results to say where the market will turn down or where the top is coming in. And I could predict it, and I'll be right and I'll be wrong, and I could do that all day. But if you want to remain as a reactive trader, which has a higher chance of winning, my point is, why wouldn't you just wait for that? Are you in that much of a rush? Are you that afraid that the market will go down without you being in a short or put position? Is that really what you're fearing right now? Oh my God, the top is going to come in. I should have shorted that. That's psychological toxicity. When we do the one and done trades, when we do the high one trades, when we do the high five trades, when we do the 821 curls, when we do the know your limit strategy, you notice something about them? 100% of those are reactive trades. They're reactive trades because they tell you exactly where you should be entering. When you look at a certain candlestick formation and you're like, there's an inverted hammer and it should go down because it was an inverted hammer right here at the top or as a hammer bar at the bottom, then we should bounce up. You're becoming a predictive trader. You know why? Because you don't have any stats showing how successful that is. You've seen it work in the past. You've seen it fail in the past. And you're deciding, well, heck, I'm just going to go for it right here. And that is exactly what you are doing. And that is exactly why, if you notice in our room, the Newsbeat live room, besides for things like INSG, which if you bought with us in the beginning, you're up a lot of money, those are fundamental plays aside. All the technical analysis that you should do should be more as a reactive point. This is in, this is in, this is in. I can buy here. I can buy right there. That's how you will ultimately become successful as a trader. A lot of the rooms out there basically say, well, this is a this is a this is a 1, 2, 3 gap, and this is an ABC gap, and this is an XYZ gap, and when you see the ABC gap, you do this, and this is this is a superstar gap, and this is a all-star Hall of Fame gap, and this is a rookie newbie you stink at trading gap, and this is one. And I'm sitting there and I'm looking and I'm like, when people say that sort of stuff out there, I look at them and I say to myself, these people have no clue WTF they are talking about. The reason why is there are just simply no stats. And it's very easy for a trader with any form of successful P&L, myself very included, to just come to you and to just spew things at you and swear by them and saying, well, you know, I'm a member at T3. Here we go. Here's my P&L. Bang, impressive, right? Well, what do you do, Mark? Well, I do this. It's all based on my algo course, which it isn't, of course. A lot of what I do is, but not everything. Problem with education is the market keeps changing. So if you're not changing with the market, you are going to be left behind. Any trades that you are doing 3 years, ask any trader like me who has been in the trading since the 1990s or even before. Ask any one of those traders, how much has trading changed for you? How much has your strategy changed? That's why educational courses are ineffective, because what they are not telling you is the trader is not updating the course constantly, telling you how they evolve. So even though there's a base level of information, to actually apply the bricks correctly and put them in the right positions is never told to you. So you're just left there shooting blindly into the wind, hoping a bird falls down. Like that's what you're doing. So when I do these things, I constantly update it. That's why I have videos all over the internet. They're meant to actually help you. They are meant to actually help you. So, like for example, we have a new one and done strategy, and you know what? I could just show you. It's my pinned tweet here. It's my pinned tweet on my Twitter, and I literally just share with you YouTubes of all the strategies that I'm applying in the market that work, and they're all over 70% effective. Now, is that going to be true a day from now? Probably. A week from now? Probably. Who knows? A month from now? Who knows? A year from now? Who knows? But if you knew Mark Melnick 3 years ago, I was doing da 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 da, none of this. Absolutely none of this. All these strategies, I was doing absolutely none of them. And if you want to find these strategies on the internet, you don't have to copy down these links. Just literally type in one and done, high one, or just screenshot this, or whatever you want to do. That's fine. But I mean, these strategies in which we apply here, are good for the current environment, and they're all reactive strategies. The problem with most gurus is they become so comfortable getting paid for running a room and spewing the same stuff which brings members in their room that they don't really care about their retention rate. That is the issue I see with the stock, and that doesn't go just for gurus in the room. Educational courses, people who write books, people who teach things, people do seminars, people who do all these things. That's why it's ineffective. It's not because they're bad people. It's just because, well, here's something that pulls people through the door that makes them drop their credit cards. Let them swipe in and hope for the best. But I really don't see a lot of people coming out with brand new things that have never been done before. They'll come and they'll say, you know how easy it is for me to come and show you millions and millions and millions and millions and millions and millions of dollars of P&L and L and just be like, hey, well, this is what I do, guys. Now let me just say, take my master class, take my algo course, and just go like this. You know, much easier my life would be. I wouldn't have to be on the phone doing, 8 hours to 10 hours of phone calls a week. I wouldn't have to answer the slew of emails. I would just be simple. Then traders would succeed or they would fail. If they failed, they would just, leave the service. If they succeeded, they would stay with the service and the marketing would keep the revolving doors going. It's like the revolving doors thing with a lot of these. Ooh, zoom out, zoom in, webcam. You got me. Okay. It's like the revolving door. You have one line of marketing traders coming in and an equal line of marketing traders going out. And that is why, if you are a guru running the room, most likely your room has not increased by more than 10-20%, unless you're brand new and you went from like 5 members to like 20 members, unless you're dealing with that. But, you know, that is why your room isn't growing so fast. Because the problem is, even though you're getting the traders in, the majority of the people in your room are losing money. And yes, you'll always have successful and losing traders in any service. But I'm saying this not negatively. I'm saying this in a way to encourage people out there because I want people to be successful. I could care less if they do it with me or someone else, but I don't see anyone else putting in that same amount of effort. I don't see other people figuring out new stuff that works in today's environment. And that is, you know, that is what I commend people for. That is what all right, I'm not saying you have to, stay on the phone all day. Oh, by the way, got my 5-year anniversary. Those are my kids. Is that crazy or what? Look at that. I've got me a cell phone case for anniversary. Okay, with that being said, I have kids that I want to spend time with and love and hang out with and play, and I do. And believe me, I have very little me time. Even members of the room in which I love dearly and would take a bullet for are like, Kathy was like, Mark, you need a vacation. And I laugh because you know what? Try saying that to the trader who's having a hard time losing money that you need a day off and you don't want to really talk to them on a certain day when they need help. Why do you think I'm sitting here back testing all these strategies if not to help you? Like I know I can make money in this market very easily. Very easily. I know it sounds cocky or conceited. I do it consistently week after week after month after month after month. Very large numbers compared to most people. And I'm fine. But it's not about me as a trader. It never has been. It never has been about me as a trader. It's about you as a community of traders. And if you're not willing to change what you're doing, if you're not willing to push forward and try new things, if you're not willing to drop the idiotic and incorrect and the fallacy of myths that Wall Street has bestowed upon you, you know, gems like let your winners ride and cut your losers short, as predictive traders would tell you. Yeah, very easy to do that, I'm sure, for, 99% of us out there. I'm sure you cannot do that. Believe me. You either throw your positions away early or you hold your positions for a while. And as a result, you'll have larger gains and larger losses if you hold it for a while. If you throw it away quickly, you have smaller gains and smaller losses. That is it. And there is nothing wrong with either style of trader. Both traders can find success in this environment. You just have to overcome the psychological part and you have to be open to trying new things. Also, take my word for it, become a reactive trader as opposed to a predictive one. Don't look at the market going down and say we've gone down too much. You can say it. Don't trade on it. I'm looking at the market here. I think to myself on this weekly of the Qs, I think we went up too much. Not in terms of where we are, just how quickly we got there. I don't care if we go 100 points higher. At least just go down first and then go up. And I'm thinking that's going to happen. So what I'm doing is I'm using the predictive part saying, yeah, eventually the Qs are going to come down and test this blue exponential 21 moving average. And the reactive trader in me says, all right, I'll take some whatever, Apple, Netflix, Google, Amazon, whatever the heck it is, and I'll try to bet it on a market moving name going higher. And that will be my trade. And that's going to be when everybody, and I guarantee you when that happens, everybody's going to be like, you're going to hear it. And when these Qs come down and test this exponential 21, the first thing people are going to go out to you and say is, oh, the market topped out here. This is where the market topped out. This is where the market topped out. I guarantee you're going to hear that. And you're going to see me being that person saying, this is where the risk reward is justified for a long trade. I'll miss the down move, but I will profit off it happening on the reversal. And if you can adopt that sort of mentality and evolve and change what you're doing with what's working in the market, I've done so many videos to teach you how to do it. Just watch all my evolutionary gatherings. It's very long. We've, I put in the time and effort, so you to help you. Watch the evolutionary gatherings. We just did episode 20. They're very long videos. They're very useful videos. We're changing lives out here. Very successfully. The majority of emails I get are positive ones, the vast, vast majority. So I know I'm doing something right here, and I will never give up, and I will keep pushing forward to ensure that as long as you're willing to give yourself a chance, I will be there and support you in every and any way I can. Can't really keep it more real and honest than that. That's pretty much how I feel. Tell me how you really feel, Mark. Well, I feel tomorrow's algo levels are, whoops, that's not it. I feel tomorrow's algo levels are right here. There we go. Move my mug. Beautiful. You could go ahead and screenshot this, which you'll get my lovely mug on your screen. These are the support and resistance levels for the Qs, Spiders, IWM, Facebook, Apple, Amazon, Netflix, and Google for tomorrow. These levels do not always hit, but when they do, and before they do, not only do you receive a tweet that they're about to hit if you're part of our service, but if you're not part of our service, I tend to make money by buying off these support levels and shorting or buying puts off these resistance levels. I have found for myself that it has been an effective way for me to consistently make money. These levels, again, don't always hit, but when they do, I do smell opportunities. And let's see, we got some game plan name for you guys. I'm watching Restoration Hardware. Name got slammed on earnings, and I'm just looking for a follow through to the downside. Let's see tomorrow potentially if it breaks 102.19. Again, do I trade these game plan names all the time? No. I have a morning game plan which I follow a lot more strictly. But yeah, definitely I'm looking at Restoration Hardware to break 102.19 tomorrow. Even have a little bit of a forex trade for you guys. Might be kind of hard to see here. Let's see if we could zoom in, zoom in, zoom out. There we go. It's just a sell limit order on the New Zealand Canadian dollar. It's based off a weekly swing setup. This is more of a swing trade here. And here's the price in which I put my sell order. Didn't get filled yet, obviously. Here's my stop loss in case I'm wrong, and there's my take profit in case I'm right. And it's a swing trade on New Zealand Canadian dollar. And of course, with that being said, if you are somebody who has been watching us for a while and whatnot, and you haven't tried our service, there is a offer within the description of this video. For $49, you can try and be part of the Newsbeat family and hopefully have the greatest impact on your trading as possible. And there's a reason, ladies and gentlemen, why the Newsbeat Live Room is the largest, fastest growing trading room in the nation. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.